What's poppin', people? I'm gonna get it out of the way because we got a lot to talk about. You're watching Celltrion, and today we're talking about one of the biggest winners of the COVID market, Celltrion. Now, before we continue, we'd just like to remind you that this channel is meant for general education purposes only and isn't meant to replace the legal or financial advice from a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. For that reason, nothing that we say should be taken as a basis for investment, and you'll have to do your own work and thinking to decide whether or not a position or any stock mentioned here is in your best interest to follow through on. Want to know how to figure that out? Well, if you scroll down a tiny bit, hit the like and subscribe buttons. We'll do our best to help you figure out how to figure out this game for yourself. That being said, let's get to it. Alright, so the last video that we did on a specific stock was on Hugel, which is a cosmetic bio-pharmaceutical firm based in Korea. If you want to learn more about them, feel free to hit the link in the top right hand corner of the screen right now. Otherwise, let's keep chugging along with one of the country's leaders in the medical biopharmaceutical space, Celltrion. With regards to Celltrion, biopharmaceuticals is an extremely general way of describing what they actually do. At the core of their business is the development of biosimilars, which are biologic medical products that are derivative of an original product made by a different company. These products are nearly identical to the original ones and can be manufactured upon the expiration of the patents for those products. Does this sound like an overly complicated way of saying non-generic medicine? Maybe, but I'll be using the word biosimilars a lot, so it's best that we cover that at the top. Now, if you've been watching the market over the past couple of years, you'll have noticed that Celltrion has three stocks: Celltrion, Celltrion Farm, and Celltrion Healthcare, all of which trend very similar to one another. Still, there are important distinctions that must be made between each of the firms if we are to develop a more complete understanding of exactly what it is that we're buying when we cop a stock of one of those companies. Now, while each of the firms have their own websites in Korean, English, and Chinese for the main holding company, it's fairly difficult to parse exactly how they differ from one another. Thus, it seems like a really good place to start for us. Now first, Celltrion is responsible for the research and development of biologic agents and biologic therapies through the use of DNA technology and manufactured in living systems. This process is different from synthetic drug development, which develops treatments through chemical synthesis and is the responsibility of the second firm, Celltrion Farm. So for clarity, Celltrion focuses on biologics and Celltrion Farm on synthetics. Finally, we have Celltrion Healthcare. Celltrion Healthcare is the third publicly traded company from the Celltrion family and originally started as Nexol Inc. back in 1999 before converting to Celltrion Healthcare in 2009 after assuming the role of Celltrion's global distribution the year before in 2008. So, to summarize, Celltrion does biologics, Celltrion Farm does synthetics, and Celltrion Healthcare is responsible for the international distribution of their manufactured medicines. And now let's get into the companies themselves, starting with Celltrion. Now, although Celltrion has seen the smallest return in price year to date, they're doing some of the most interesting work at the moment with regards to developing antibody therapies to address the coronavirus, with their monoclonal antibody Regcurona getting a green light for use in Brazil by their medical regulatory agency. This drug was developed to deliver antibodies to patients already infected with the coronavirus, with the inhalation-type Regcurona aiming to deliver said antibodies directly into the respiratory tract and capture the virus within the mucus of infected patients. Now, in the midst of all this, the company has still been developing biosimilars like Remsima, the world's first antibody biosimilar, and a number of antibody biosimilars that aim to address a wide range of health issues like asthma, arthritis, metastatic colorectal and breast cancers, osteoporosis, psoriasis, Crohn's disease, and diabetic macular edema. This is just to say that their biosimilar development has been wide-ranging prior to the rise of the coronavirus pandemic. If anything, the pandemic simply accelerated their rise as a major player in the global biosimilar and biopharmaceutical market, as well as their role as an industry leader within the Republic of Korea. Celltrion released their Q2 earnings report on the 13th of August, so let's poke around in there and see if we can glean any information about the stock's recent movement and the company's potential short-term growth prospects. Or long-term growth, obviously. Now, the company's stock price has been hovering around a 3 to 10% drop in its overall share price since August of last year, which seems to perfectly align with the 10% reduction of operating profit reflected in the report. Now, it's important to note that this correlation does not necessarily denote causation, especially given that stock prices are inherently forward-looking. But of the vast troves of information that go into price discovery, the year-over-year loss in operating profits may be playing a role in the company's price dip over that time. The company's expectation for the loss is sourced in a combination of their increased market share as well as the need to optimize their production mix to meet the increased demand. And they present this negative impact to their OPM as being a temporary adjustment that'll smoothen out due to steady demand for their existing biosimilars and high-margin products. With regards to their balance sheet, it's encouraging to see that their net cash has increased substantially between fourth quarter of last year and second quarter this year, with an increase in retained earnings, current and cashable assets, and a decrease to all categories of liabilities. For current investors in the company or the industry at large, it may be beneficial to look into the overall progress of the clinical trials for their products, which they do a case-by-case breakdown of in this investor package, but for the sake of saving time, let's move on to the stock vitals before rolling into Celltrion Farm. Now, their price to earnings has been on the high side for the past little while, with them sitting at just around 68 times earnings at the time of this posting. In addition, their price to book is just over 11, with their ROE sitting at 12.53 for the trailing 12 months, and a positive uptrend in revenue and net income over the past 3 years. To get a better understanding of their cash flows and growth prospects, it would benefit you to look into all of their English language information packages, which are readily available and I will link to in the description box below. But for now, let's move on to the next one. Now, Celltrion Farm, the newest of the 3 companies to the Celltrion family, does not provide English investor packages through their site in the same way that the other 2 firms do. So for this portion, we'll be using the Korean package, which generally comes with the same information anyways. Now, for reference, these are the info categories provided in the English package for Celltrion and the info on the Korean package for Celltrion Farm. You'll notice that they provide 2 extra categories, but that's easy to account for. The main thing to note is that 영업이익 refers to operating profit, while 순이익 refers to net. Now, in comparison to Celltrion, Celltrion Farm has seen massive growth in year-over-year earnings, with their revenues, operating profits, and net profits all showing triple-digit growth over that period. Naturally, their stock has seen the most growth of the 3 that we're looking at today, and by a wide margin. Now, of course, the top-line earnings growth has played a big part in their bottom-line growth and OP, with these numbers being supported and stabilized by sales in new business sectors and a reduction in production costs. One frustration that investors have had with the stock over the past couple months has been the intense short selling of Celltrion Farm, which they claim to be holding the price down, but this channel tends to look long-term, so short selling in the short term is not a big issue for anyone who believes in the growth and sustainability of the company's pharmaceutical arm. With respect to business vitals, they're priced at around 178 times earnings, which just suggests that they're priced for extreme growth. They have no dividend as of yet, and are also priced 22 times that of their tangible book value. Now, although they don't have English investor packages, they are very well covered by sites like Reuters, so if you want to check all of that stuff out, you can do that over there. Finally, we have Celltrion Healthcare. Now, while this company does usually release English reports, their paperwork for the second quarter this year hasn't been released, so let's use the Korean ones. Now, a little trick that we've talked about in the past for those of you who haven't really gotten used to reading Korean IR materials yet is to just remember the meanings of top and bottom line earnings, because the top line of almost every report will start with 매출액, which just means revenue or sales, and this is generally consistent for both firms from home and abroad. And the same thing goes for bottom line earnings, aka net income, aka 순이익. So when you're just looking at the page that looks like this, top line earnings, 매출액, revenue, bottom line earnings, 순이익, net income. Anyways, let's keep going. Like Celltrion Farm, Celltrion Healthcare has seen both revenue and net income growth for both quarter-on-quarter numbers and year-on-year numbers. Their gains have been less than that of Celltrion Farm, and if we look at the price movements of all 3 firms, the reality of their earnings growth correlates with how the market views their stocks. Now, I expect that they'll be releasing the English reports in the very, very near future, and all of this info will become very readily available to you, but I just want to include some of the core information from their package that reflects what one might expect from them in the coming years. Now, they've shown quick growth over the past 5 years in Europe with regards to Remsima, Truxima, and Herzuma, all of which seem to have plateaued since the start of the pandemic. But at the same time, they seem to have made up for this with their large strides in market share growth in both the American and Japanese markets. In addition, their ventures into the Canadian and Australian markets are just getting underway after receiving approval to sell their wares in January of this year and December of last year respectively. In addition, they launched in both countries in June and July of this year, so if the trends in market share growth repeat themselves, we could be seeing a lot of revenue growth for the firm in the coming years. Such revenue growth already seems to be priced in, with their PE ratio sitting at about 88 times earnings. Their price to tangible book is around 9.5, with an ROE of 6 and no dividend. That's all I'm really going to say about the companies individually, because this is already over 10 minutes and I want to save a little bit of time for you. But the key thing to note is how absolutely big they've all gotten over the course of the pandemic, and the way that the company has taken this opportunity to increase their presence in the global drug manufacturing and distribution market as a whole. Now, one more thing to note before we go is that at the end of last year, there was news of plans by former Celltrion chairman Seo Jung-jin to cash out just short of 25% of Celltrion Healthcare to create a new holdings company called Celltrion Healthcare Holdings, which would in turn merge with Celltrion Holdings, effectively placing all three firms under a singular holding company. This aims to achieve two things: streamline operations across the three companies and separate ownership from management. This should hopefully improve the transparency of the three businesses while also improving cost efficiency. Since then, Chairman Seo has stepped down for retirement, and he's had his operational roles filled by his two sons. There hasn't been much English news with regards to the merger itself though, so I'll do my best to make sure that I keep up with the news and let you guys know if something actually big happens. And that's about it. Info on Celltrion is coming out consistently as they aim to be the main COVID vaccine producer in the Republic of Korea, and as their stocks remain hot with the resurgence of the virus both abroad and at home. At the moment, Celltrion sits as the 10th largest company in the country by market cap, with big buffers between 9th ranked Hyundai Motors and 11th ranked Kia. As such, they've been getting a lot of English language coverage, which, if you're aiming to invest, is certainly good news. Still, as with any stock that we mention on this channel, it would benefit you to get into the nitty-gritty of their finances and see what you think about their prices as well as their overall value. This is not financial advice, this is just information. Alright, that's it for me. I'll be back with a quickness to talk about more things that may interest those of us looking to secure the bag over in the Republic of Korea. Also, if you don't already know, CU has started stocking the stroke of gastronomic genius that is the classic pepper and lime takis. Go grab some. You'll enjoy them. Peace.